All right. Yes, Forex goods. This is our introduction lecture to Forex trading. So, before we can start, I'd like to share some piece of disclaimer that the content herein is actually meant for educational purposes strictly, since I'm not a financial advisor. Therefore, any way that you intend to use this information, trust me, I'm not liable to anything. So let's see the disclaimer. There it is. You can read through. Okay, I think you've read through. Those who haven't read, you can pause and then you read through, but that's it. So now we can start. This is our introduction, and of course I'm assuming that everyone here is new to trading, although that's like a worst case scenario. I know most of you, by the time you're here, you've known some, at least a little few things, but let's assume the worst case scenario so that we can have proper content delivery. Therefore, what is trading? Trading normally refers to the voluntary exchange of goods and services between economic actors. That means there has to be two parties or more that are acting on the services or exchange of goods. So when there is an exchange, that's called a trade. If you remember back then, there was something like barter trades. There is right now we are doing monetary trade. Yeah, there are very many kinds of trading. So it is all about just exchanging. You give me this, I give you that. You give me this, I give you that. That's what trading is. However, forex trading is the buying and selling of stocks, bonds, currencies, and other financial securities for a period of time. I wouldn't necessarily say short, because that was from the internet, but I wouldn't say short. It's for a period of time depending on whoever is selling and who is buying, because there are different types of trades, as we shall see in our nearby future. Yeah, so that's basically forex, just buying and selling. In short, it's an exchange, but the exchange, of course, there is a party that is buying and there is a party that's selling. You understand? Then I've seen this in many places. They say trading is gambling. It's what? Well, as it may appear as gambling due to the influence of people from social media and everything, I can really assure you that trading isn't necessarily gambling. It would appear like that if you are actually not having knowledge of what you're doing. You just wake up, you buy, or you wake up, you sell, and then boom, profits. Yeah, so that's when it would look like a gamble. But if you actually know what you're doing, you know the risk involved, you know exactly how it's supposed to take place, how it's supposed to happen. You're supposed to buy at this point, at this time, at this price, then that's not gambling. It's actually more of, I would suggest that it's called an investment, as our brokers really tell us. Yes. So my point of view is there is no gambling, because if we are taking a gamble, in most cases we are doing a 50-50 thing. Well, as trading can as well be 50-50. You take a trade well knowing there is a high probability of loss or a high probability of profit, but it's on 50-50. Yes, that can also be trading. It can be that a gamble. But if you really invest in your time, efforts, and energy, you really know what you're doing, and it doesn't look 50-50. The probability is more on one side than the other. You can take a trade well knowing it's high probability it's going to be a loss, or you take a trade knowing it's high probability it's going to be profitable. You understand? Therefore, it is way different. and I hope you know the choices that you're making as you're starting this. So like I said, I wouldn't call it a short period of time. Therefore, the types of trading we have, one of them is swing trading. Swing trading normally captures a good amount of time. It can take months, normally it's a week and above. Yeah, it could take a week, 2 weeks, 3 weeks, or even 6 months. That's a swing trade. Yeah, and that is normally on the financial instruments and other stable commodities, yeah, that we are trading in our forex market. Then we have fundamental trading. This is like the gambling parts that most people know about. In most cases, we have news during our trading hours and everything. So there are people who are intentionally set to go into that news event and take a trade based on that. That's called fundamental trading. Why? They're basing on fundamental factors. Understand? Yeah. Then we have day trading, which is like the biggest percentage of traders. They are day traders. You take a trade from now, and then 6 hours later you're out, or 2 hours later you're out. That's day trading, but keep on taking it like in a period of a day, 2 days, 3 days. Yeah, you understand? So those are the different types of trading. Then there is scalping, which is our very limited time exchange of prices, because it's for small changes in price. So whereas day trading, most traders are day traders, there is a high percentage of also scalpers, people who take about 5 minutes in a trade. That's called scalping. You just want to pick off a small range of the price difference, and you profit off that. Understand? Yeah. So as we are starting this journey, you're supposed to know what kind of trader you are, what kind of trader you're willing to be, and what kind of trader is your mind ready to be. Because as well as you may be willing to be something, your mind is actually different. It may not be able to support that due to the mental requirement, mental capital that's required of that. Wow. So you will learn this with time, that most people come from swing trading, then they go to day trading, scalping. They keep on switching between the different types of trading until you find your real trade, or the one that really suits your kind of personality. Understand? Yes. So the different, so balance is the total cash present in your trading account. Yeah, that is including all the losses and profits. As long as all the positions are closed, that is your balance. Yeah. Then we have something called equity. Equity is the amount of money that you're having, including the open positions. That means the balance excludes the open positions while equity includes them. So normally equity will be higher or less than the balance. If you're in a losing trade, equity will be less than the balance, and if you're in a profitable trade, equity will be higher than the balance. I know you're wondering why we are talking about losing. It's being realistic. Then there is a margin. That is money normally borrowed from the broker. When you enter the broker has leverage that he gives you that will enable you open more positions. So that comes through margin. Then free margin is the amount of money that you have that is able to make you open up a new position. You understand? Yeah. So minus or plus the running positions, the more you are profitable. Let me say you're having 3 running positions and they are all profitable, you will be having a higher free margin. That means you'll be having another chance to open up a position. Whereas in the other side, if you're having losing positions, you'll be having less free margin, and that will mean you're having less chances, or even none, to open up a new position. That depends on the leverage and the balance. Leverage and the balance normally. Then we have the margin level. Margin level, that's normally a percentage of free margin and margin, something like that. Then we have a commission. That's a fee normally paid to the broker for a transaction in your trading account. For every position you open, you're carrying out a transaction. Let me say you're buying a given asset, you are carrying out a transaction of buying. Therefore, if you're buying, the broker has helped you to buy, so he picks out a commission from you. You understand? We continue this with other terms, like we have the swaps. The swaps are for trading positions overnight. If you trade a position, let me say like today, and it exceeds the open of a new price of a new day's range, that position is subjected to swapping. Like they are swapping your position from yesterday to today, and swapping is normally a fee that is dependent on the broker, because every broker has their own charges. We have a stop loss. That's an amount you're willing to lose, provided the trade does not go your way or is against you. Then we have a take profit. It's an amount you are contented with to move out of the trade, or it's a price at which you want to get out of the trade if it's to go your way. Then of course I talked about leverage earlier. That is a strategy of borrowing money. Every broker has a maximum leverage they can offer you. It is to help you take trades with your low amount of money. You find that you are not supposed, or you're not subjected to trading with a certain amount of money, like $100, but then the broker, since you're working with the broker will give you leverage so that you can carry out that trade. Remember, here we are exchanging, but we are working with big banks. Now you told me you are going to exchange with a bank for about 3,000 euros with only 100 euros. Do you think that's possible? I don't think so. That's why the leverage tool comes in. Now, the higher the leverage, of course, the more you can open positions and the more profits you can make. But if it doesn't go your way, trust me, it's the more losses you can make as well. Therefore, it's a tool that you're advised to use with financial advice from other people, or with well-known knowledge of its outcomes. And then the main trading platforms that we are going to use for our trading will be TradingView, MetaTrader 5, then CTrader, but that's on a low scale. There are very many trading platforms, there are very many. There is MetaTrader 4 to start with. Then they are all broker dictated, you understand? So if the broker dictates that you're going to use this platform for your trading, then that's it. But my main emphasis is going to be on TradingView, since it's what we are going to be using for most of our time for our practice and our learning in this course. So TradingView will be for analysis, practice, and a lot of previous data or information that we shall see, back testings, all that will be from TradingView. Then MetaTrader will normally be for carrying out trades, but then TradingView can also do that depending on the broker you are signed up with. CTrader, I don't think I'm going to use that. I was just giving you knowledge. I'm not going to use that, definitely. Then there is this question on everyone's mind. They'd be asking, what is it going to take? Yeah, what is it really going to take? And it's a big question for everyone, because when you're involving yourself in something, you're supposed to know the risks involved and the benefits involved, plus the time it's going to cost you. You get? Time is a very precious commodity that we all have, and once we give that away in a way that is not properly decided, then it all come back to us in form of regrets. Therefore, I would prefer to tell you what it would take. It's going to take a lot of factors. Yeah. Now, I already talked about time as a precious commodity, but then this timing again is very different for all of us, because you find that you are going to grasp a concept very fast, whereas I won't. I won't take it in that fast. I may require much more time than you did, or I may require much more practice than you did. You understand? Therefore, I don't think the time factor is the same for all of us, but this is the same for all of us that I'm going to explain. One of them is patience and discipline. Yeah, in whatever we are going to do, the number one rule is patience, the second rule is discipline. How do these two apply? As we shall see in the future, but basing on what we've already studied in the previous slides, you can see that at least we require some sort of discipline, because if we are dealing with leveraged tools and materials, then it would cost us a lot if we don't control ourselves. You understand? Therefore, there is supposed to be a bit of patience and a bit of discipline in whatever aspect that we are doing. Let me say you are trying to backtest something. Take time, take the patience. Yeah, it requires. Take time, watch it, see it happen, and that will be it. That will help you model it into your mind. That will help you, give you a more conscious approach. You understand? Then the discipline is more of that will come in another sector when we are talking about now taking trades and all that. But the discipline for the start that we are going to talk about is normally working out your time. Understand? As much as we all want this, we all can't get this, because of course we are having different times. You find you're needed at work, you're having different responsibilities, and they also require your attention. So you should first of all separate your time. You get time for this, you get time for your friends, or you get time for family socializing, you get time for finding money elsewhere, because of course you will require capital if you're going to do this. But as I said, I'm not a financial advisor. So that's the discipline we want. We want to create a routine that is going to be based off your best version that you want to see, and yeah, and you put that routine aside with trading. You understand? So in any way you won't have anything conflicting your daily routine, because everything is according to plan. So with that said, there is also this dedication. Well, as I know most of you are going to start watching this, but trust me, by the end it will be the few that make it. Yeah, it's always like that. It's always the few that are willing to keep on, push harder and everything, that will reach the end and the success that you all desire. So there is patience, discipline, dedication. There are 5 factors. There is practice and self-awareness. Self-awareness comes in the emotion factor. Yeah, you must be knowing how to control your emotions and what best suits you. That's why I told you, you're going to find out that in the beginning you want to be the swing trader, but in the end you may end up as a scalper, because your emotions may not be okay for swing trading. You understand? Yeah, so I think that's it. We just have a look at the course contents. We want to divide it into 3 chapters. One of them is price, then the second is time, the third one is order flow. But before order flow, we shall have time and price. Remember, price is a very big area of learning. Therefore, if we just go straight out to time if we just wait for finishing price without considering time, then some factors may not work out. So we shall study like price for half, and then we go into time. Then now we come back for full price, and then order flow. Yeah, with that said, I think that's a good introduction. And oh, I didn't introduce myself. I am Forex King. You can find me on Telegram as FX King 256, or you can locate me in the channel Forex Gods. It's still also on Telegram. Yeah, you can find us there. Then I think that's enough. We shall continue with this lecture later. Thank you for your time. Good luck.